Let's talk about the economy for a moment. Right now, it seems as if we borrowed an enormous amount of money to pay for the recession. In effect, the Fed has put up maybe $4 to $6 trillion off its balance sheet. Congress has maybe put up so far 3+ trillion, maybe close to 4 trillion. So, are you worried about the debt having an impact on the economy in terms of the value of the dollar, inflation, or just the size of the debt and our ability to pay it off?
Sure. So, if you think about the country as a business, the country has a lot of intrinsic value, a lot of asset value. I would say one of the most valuable assets of the country is the country owns 35% of your income and my income. In a way, you can think about that. That's the current level of taxation, federal taxation. So that's in effect the country owns a 35% stake in your intrinsic value and my intrinsic value as a contributor to the economy, and the country retains the right to change that percentage ownership at its will by in fact changing obviously tax policy. So there is then of course we have enormous assets, whether they're real estate assets or infrastructure assets, that are so I think the asset side of the U.S. balance sheet is very, very large. Obviously, you never want to let the liability side of the balance sheet grow too much, and there are a lot of not just debt liabilities we have outstanding, but we have Social Security, the enormous healthcare costs, Medicare, Medicaid, et cetera, that we bear as a country. So it's something that is concerning. We are fortunate finding ourselves in a very low interest rate environment, but it's something to think about and be concerned about. But it's sort of difficult to do the same kind of calculation of the leverage nature of the United States unless you do a proper valuation of the asset side of the balance sheet.
So we're in a technical recession. We're technically in a recession, I should say, and fairly deep. But right now, when do you think we're likely to come out of this recession? In the third quarter, fourth quarter, next year? Do you have any views?
Yeah, I think we're going to, begin a recovery, certainly by year end. I don't think we'll be back to anything close to a normal economy until probably the second half of 2021. I think if we have an early vaccine, Pfizer's been talking about a potential distributable vaccine by the fall, that will obviously make an enormous difference. I think if we can reduce the treatment of the virus to, one, a test you can take at home and get an accurate result in 15 minutes, and it's telemedicine to your doctor to get, the doctor to say, okay, you need a prescription for remdesivir in a inhaler format, and you can stay home for 2 weeks and be fine. Those things will make a fairly significant, positive impact. But I think we've had kind of a sloppy closure of the country for the virus, and we're having a bit of a sloppy opening. So I think you're not going to have business confidence return and consumer confidence return until the kind of people feel safe, truly safe. If I had to guess, that's really more like the second half of next year, and into the beginnings in Q4 and Q1 and Q2 of next year.
You've said sloppy opening. What you mean is there's a lot of cases in Texas and Florida of people getting virus now, and it doesn't seem like it's disappeared. So are you worried that this could, without a vaccine, keep going on through all of 21?
I think what will happen is, the healthcare system is getting better and better at treating the virus. So, they're learning when to put people on a ventilator, more importantly, when not to. They're learning which drugs can have a positive effect, and learning more about what doses and earlier, when to give the medication. Testing is improving. And I think all of these things are positives and will improve confidence and reduce, kind of risk. Things will be a lot better, I think, in a few months, although you're going to have some states with a lot more cases because people have not been careful, and those states are going to have to moderate economic activity and maybe, go to a mode of protecting more aggressively, people at risk and being more cautious, again, all the things which will temper the economic recovery. But I do see a, kind of gradual improvement in all fronts as the global healthcare system, every medical researcher in the world basically working on solving one problem and a lot of resources going into it. So I think by the fall we'll feel a lot better if we can take death off the table. If we can take severe illness off the table, I think that's certainly possible in this calendar year. People are going to feel a lot better about living and going out and living a more normal life.
So if Jay Powell called you tomorrow and said, look, I'm not sure what I should do. Should I do more? And if the Secretary of Treasury, Steve Mnuchin, called you tomorrow. Should I pass another bill working with Congress? What would you tell both of them? Would you say we need more help from the Fed, we need more help from Congress, or would you say we've had enough help?
Look, I think we have to protect the most vulnerable people economically during this, period of time. And I don't know, when do these programs precisely run out? You need to design programs. I've heard, and we've made a lot of investments in the restaurant industry, where some of the benefits are at a level where they're better than $15 per hour, sort of the minimum entry points for many private businesses, and it discourages people returning to work. So you need to design them in such a way that you don't reduce economic incentives to return to work, but you have to have them large enough to protect people, during one of the more challenging times, particularly for people at the lower end of the economic scale.